Welcome to the Business Outlook Survey press conference call for January 2012. My name is Catherine Dibling, Public Affairs Specialist with the Federal Reserve Bank of Philadelphia, and with me today is Mike Trebbing, Senior Economic Analyst. Today we will take questions from reporters about what our manufacturers had to say about business activity in their firm this month. First, Mike will give a brief summary and then take questions. Mike?
Well, thanks, Kathy. Our monthly manufacturing survey respondents indicate this month that regional manufacturing activity is continuing to grow in December at a continued moderate pace. The survey's diffusion indexes for general activity, new orders, shipments, and employment were all positive this month and reflect modest growth rates. On balance, employment is increasing among the polled firms, with about a fifth of the firms reporting hiring workers this month. The survey's price measures continued to show rising input prices, and some firms reporting increases in their own manufactured goods. The broadest indicators of future activity showed continued improvement this month, suggesting that firms are becoming more confident about growth over the first half of 2012.
Okay, now for questions. Mike Armstrong, Philadelphia Inquirer.
Hi. Mike, I wonder if it doesn't seem to be similar to what happened to start 2011, where manufacturers were looking ahead at seeing prospects looking brighter, and then, of course, we had the Japanese disaster, which may have changed a lot of that.
Right. Similar, of course. We seasonally adjust the numbers, so we don't think that it's because of a beginning of the year effect in terms of optimism. The numbers, were very similar to December, with a little bit of an increase in the activity index, and still, single-digit indicators for most of the broad indicators, and a continuing trend of a small fraction of the firms reporting employment growth, with a balance of more firms reporting growth in employment than declines. So it's a continuation and continuation of several months, and the outlook has actually improved, for five or 6 months in consecutive months. So if there's any similarity to last year, it's more, maybe more coincidence, but the current indicators are showing some modest growth overall.
Okay, Kathleen Madigan, Dow Jones.
Hi, Mike. Regarding the special questions, could you give us the split between the firms who are expecting to hire versus the percent who are expected to restrain hiring?
Right. We ask, of course, every month the percent of firms that are expecting to increase employment over a 6-month period. In this month, I think we had about 28% of the firms expecting growth over the 6 months. The share of firms that were expecting growth in employment over the next year was around 40%, and the share of firms reporting that they expected declines in employment over the next year was only about 12%. Of course, we were asking the firms whether the most important factors that were influencing both their plans to increase employment and to hold back employment. And of course, some of the firms answered the questions about holding back employment logically, that they may not have hired as many people as they had expected. So we got information from almost all of our Business Outlook survey respondents on the special question.
Chris Reese, Reuters.
Hi, Mike. Just wondering, with the 28%, looking to hire over the next 6 months and the 40% over the year, I'm kind of wondering how that fits in with previous months. Are you seeing any kind of trends there, or are people, getting maybe a little bit more optimistic or less optimistic about their hiring prospects?
I'd have to look at the numbers here. Of course, contributing to the the index overall for a 6-month forecast, the contributing factors are fewer firms reporting expectations of decline. There's an influence there, but most of the growth in the 6-month forecast on employment was attributable to more firms expecting to hire rather than lay off. So that's a trend that we're seeing continue over recent months.
You were sort
at
of
least.
fading in and out there. I missed the last bit.
Yeah, I was saying that the contribution of the we asked the question about whether they're going to increase or decrease employment. Of course, the diffusion index measures a balance. So some of the improvement in the 6-month forecast of employment is due to fewer firms reporting they expect to decrease employment, but for the most part, the contributing factor has been in recent months more firms expecting hiring.
Okay, follow-up questions. Mike Armstrong, Philadelphia Inquirer.
Yeah, looking at the special questions again, the number one factor influencing increasing employment was expected growth in sales is high, and then you look at the restraining, the second most mentioned reason was expected growth in sales is low. And how should we read that?
Well, with regard to adding employment, I guess that's fairly obvious.
Right.
With regard to the restraining factors, we asked this time, the cost issue, and of course, it was close to the top of the list in terms of needing to keep costs low for competitive reasons. And we did have a little bit of an increase this time in the share of firms that mentioned finding the required skills that was necessary. We ran this question last January as well, and saw the similar composition in terms of sales and sales expectations, but there was more firms this time that had mentioned problems finding the correct people for the jobs that they have open. That was one slight difference.
Follow-up questions. Kathleen Madigan, Dow Jones.
No, none for me, thanks.
Chris Reese, Reuters.
Yeah, nothing from me either.
Okay, thank you very much. We'll talk to you next month.
Yep, thank you.
All right, bye.
Take care.
You've just been watching January's Business Outlook Survey press conference call. My name is Catherine Dibbling, Public Affairs Specialist with the Federal Reserve Bank of Philadelphia, and with me today has been Mike Trebbing, Senior Economic Analyst. We'll be talking to you again on Thursday, February 16th, 2012 at 10 a.m.